All right, traders, my green streak has ended once again. After 3 green days in a row, I did end up having a bigger red day than usual, giving back the past 4 trading days of profits. With that being said, towards the end of this video, I will be explaining to you the mistakes that I ended up making as a trader. It did not have to do with my trading plan in key levels. I actually went against my key levels and I ended up losing doing that. I was supposed to be buying put options at 429.50. I tried it, got stopped out quickly, switched to calls, ended up losing. I will be explaining to you the mistakes that I ended up making, which is going to help you grow as well. Now, what I can say is this. From someone who's experienced massive losses throughout the past as a trader, I've learned to recoup my losses fairly quickly, and being resilient has been one of my best traits to have as a person. And I'm going to tell you that Fridays are known for being my best trading days, and I have an amazing trading plan for you guys tomorrow, and I will show you exactly how I am planning to trade the best setups at the best prices. This plan that I'm about to give you is expected to work out phenomenal, so we're going to get into that first, then we'll get into the trade recap and the lessons that you are going to learn from the mistakes that I ended up making today. So in terms of the team, they did fairly well. G-Roar, he absolutely crushed it today. He hasn't been red throughout the past 3 months. I haven't seen him have one red day, but the team did fairly well. We had 72 people green, 11 red. We had more people red. I didn't do fairly well. I did have one amazing trade on call options, but I sold it so soon that would have had me up nicely on the day. But I'll go over the mistakes towards the end. But look, man, let's get into the plan. Let's get into how we're going to take money out of the market. How are we going to take money out of the market? What are the key levels we're planning to trade at? What are the patterns that I'm seeing? So first things first, we're going to start off with the daily pattern. And in terms of the daily pattern, I do not blindly trade this pattern and I do not let it bias me. This is something that I see and something that I've identified. And what I do is I trade what I see. So if I see there's confirmations that this pattern is going to repeat itself, then I'm going to align my trades with the pattern. So Will, what's the pattern that you're seeing? This is the pattern that I'm seeing on the daily chart. So what I like to do is I like to go back throughout the daily chart, and this helps give me a better understanding on where the market is going to be heading for the following day. If I spot a pattern, there's not always going to be a pattern that I spot, but I did end up spotting a pattern, and that's what the market has given us. So this is the pattern. You can see right here, you have this green candlestick, and what you want to do is you want to identify exactly how the candlestick looks, right? So you have this little wick right here, and then you have this bottom wick right here. I think we can all agree that this candlestick right here is very, very similar to this candlestick right here. So what ends up happening the next day? And the reason why we care what happened the next day is we look for confirmations that history is going to repeat itself in similar cycles, not to an exact T, and it helps gives us a better understanding of where the market can be heading for tomorrow from a technical price action point of view if you trade what you see. So what ended up happening was it had a small drop. It had a small drop under the previous closing price. To be exact, it dropped about $1. So the SPY ended up dropping about $1. Then it had a very bullish recovery, closing strong at the highs. So I went back throughout the chart history and I've analyzed how the SPY is known for reacting when it forms this daily candlestick at key support. So the key is, it's not just the pattern, it's where the pattern is. The pattern's at key support. If there's a bullish pattern at key resistance, it might react bearish. That's another thing that people get confused with patterns. It matters if it's at support or resistance. We're at support, we're oversold, so what I will be looking for tomorrow is a small drop. And my plan will be to buy call options on that small drop. We are already having a small move down during extended hours, so what does that mean? That means that the pattern that I'm seeing is already trying to align itself. If SPY's having like $1 drop tomorrow towards the morning, that gives me confidence that that pattern that I showed you is beginning to repeat itself because it dropped first about $1 in terms of measuring the move, and then it began to spike. But what you need to understand is these patterns that I show you are similar cycles of history if they do repeat itself. So it's our job to confirm that it's going to repeat itself. And you have to understand that if it does repeat itself, it doesn't happen to an exact T. It happens in a similar cycle. So it could have a bigger drop or it could bottom slightly higher. These are things you have to understand. That's where trading the price action and trading what you see comes in handy along with the history. So that's what I've identified, and that's what will be going into my mind heading into market open. But I'm not going to blindly trade it. I have to see that it's actually going to repeat itself. I have to see, okay, is it having a small drop towards open? Is it bottoming out our key levels? So Will, what's the key levels? So in terms of measuring the move, we're going to say $1 drop from where it closed at. So if we're dropping to about, 428.52, it drops $1, 427.52. If we drop about $1, that's going to give me some understanding that I'm going to be bullish, and I'm going to be looking for call opportunities if I see a bullish confirmation that that pattern is going to repeat itself. Now, what are some other key levels for calls, right? Because it doesn't repeat itself exactly to a T. In terms of some other key levels for calls, this is what I'm going to be looking at. We have a lot of previous resistance in the pre-market right here towards 426.90. It is going to try to bounce here. Now, what I dislike about this in a sense is it did kind of retest and react to support, so it already played out. That's what I dislike about it. I like playing levels that haven't been tested, and in a sense, these pre-market resistance highs, when it had a breakout, it did drop back down and it did retest. That's what I dislike about the situation. So it's more of like a daily pattern, so it isn't as special to me, and it's more of a reflection on the daily pattern, right? Now, I will say this. If it doesn't bounce at 426.80, I would be shocked if we didn't bounce at 425.30 to 424.90. That would be my next zone to buy call options. So if I trade in what I see a bullish confirmation, and I'm buying calls right around the previous resistance, which is what I'm not favoring in terms of the intraday chart because it already played out. But I'm favoring it in terms of the daily chart if I see a confirmation trade, what I see, right? Say I play that, I get stopped out. I'm going to look to make all my money back and more at the lower dip at 424.90. That is my game plan for calls in terms of the daily pattern repeating itself. Now, let's say SPY goes super bearish, the pattern doesn't repeat itself, we didn't do calls, or maybe we did calls, we're trading what we see, we got stopped out, whatever happens, right? What would be the game plan to buy calls from there? The game plan to buy calls from there would be to wait for the following. $422.29, which is going to be Wednesday's low of day, along with this zone. I would be adding, if we had a small drop, to the gap. There's a gap that is still waiting to fill at 421.80. That would be my next level for calls. And that would be if the SPY flipped super bearish and that pattern that I showed you on the daily chart did not repeat itself. Now, my next level for calls for that, and that should bounce fairly nicely for a nice little scalp there. My next level for calls below that, and there will be no other level calls below that in terms of speaking for tomorrow, $420. $420, there's a little gap here that used to be here. It already filled, so it's not too special, but it's key support. It's a nice whole rounded number where the market is going to try to bounce. So if things got really, really ugly, 420 would be my next level for calls. That is my game plan for call options. Now, Will, what is your game plan for put options? I'm going to say this. If that daily pattern is repeating itself and SPY is bottoming at that first zone I gave you for calls, like 427 to 425, it's reacting bullish, I will have zero interest in calls. Zero interest in puts, excuse me. I will have zero interest in puts because that pattern said it's going to try to close strong at the highs. Now, in terms of my levels of interest for puts, it would be at key levels, even if that bullish pattern repeats itself. Right here, this is where I would do puts. These are the only levels where I would consider puts for tomorrow as of now in terms of making this video. $432. $432.20. There's a gap to fill above. This is where the bulls got trapped. All the swing traders, all the gamblers got absolutely destroyed here. When the SPY goes back to this gap, this is where I'm shorting. This is where I'm doing put options. As you can see, the level that I gave you guys for puts worked out 100% spot on to the T. I tried puts. I got stopped out. The price action today just wasn't for me. I did not like the way that SPY was trading. I found it very, very difficult in a sense to trade the price action today. I didn't like the way it was moving. It was not working out. I had one amazing trade on calls, but I sold it too soon, so it didn't have a massive impact on my day. But in terms of other people's days, they held it longer and they banked on those calls and they called it for the day and they didn't, keep on doing puts like I did at one point for just small stop out, and then I switched to calls, and then that's where I had the big loss. I'll get into that. But anyways, this was the key levels. The key levels right here, 429.50, literally the high of day. That's where I wanted to do puts. I tried it towards that level. I got stopped out. Jim C did it toward that level. He's a day trader. He holds for bigger wins. He didn't get stopped out. He was holding with ease, and he absolutely crushed it on puts. Big shout out to Jim C. But anyways, I had the right plan set up, but unfortunately, I got stopped out. And then as it was dropping, I tried to do calls, and I'll be explaining to you why I tried to do calls. And it just didn't work out. I was off on the day. It wasn't my day. I did not like the price action, and it just wasn't a great day for me. But I did have one amazing trade on calls, and that put a lot of people on the day green. But I got to give a big shout out to G-Roar and Jim C, because their green streak is truly incredible, and what they're doing in the chat is absolutely amazing, man. So with that being said, that's my level for puts. And as you can see, 429.50 worked out, and previous support right here at 430 reacted as a resistance, as it should. So when we go back to 432.20 and close the gap, that's where it's going to try to react as a resistance, react as a crash. I have the perfect plan set up for tomorrow, and I'm ready to take money out of the market. Fridays are known for being my absolute best day, and it is time to be resilient. It is time to recover, and it is time to get it all back, man. I absolutely love it. When you hit a certain point in your life, especially when you're doing extremely well, those small setbacks are the most fun because it pushes you to go higher, and it's so much fun to climb your way back up instead of just going straight up all the time. To have those small little setbacks, they're gonna help push you to the next level, and that's the most fun part about it. So like I said, man, I absolutely love it. Every once in a while, you're gonna need the market to give you a nice little red day. But yeah, with that being said, that's my overall plan. That's my overall levels. Now, I'm just gonna quickly go over the mistakes. So in terms of the main mistake that I ended up making was this. I actually had a short biased thesis on the SPY. So I was already short biased at 429.50 with my key level. I tried puts, I got stopped out. Then what I did was I identified a 30-minute pattern. So I looked at the 30-minute pattern on the SPY, and I noticed it topped out at 430. And 430 was actually a fairly key level, and this is why. You can see right here, you had very strong support on the SPY at 430. Once it cracked that support and gapped down, reacted as a resistance, never retested, it sold off hard. So when it hits 430 for the first time, it's likely going to drop first and react as a resistance level, which is what ended up happening. So I noticed the SPY was going bearish, it was selling off, and then I identified a 30-minute pattern. This was the 30-minute pattern that I identified. I noticed there was a green bullish candlestick right here, and then there was a red bearish candlestick right here, which is overall bearish. That previous 430 support was reacting as a resistance, which is bearish. And then I compared the pattern. I looked at the 30-minute chart and I said, okay, in a sense, this is forming the same green bullish candlestick as it did right here. And it's topping out at lower highs on the closing of the 30-minute candle, which means if this pattern in history repeats itself, for the next 30 minutes, it will have a small spike above this 30-minute candle, like it did in a sense, and then it will sell off very, very hard. So I was short biased, and I was planning to buy puts towards this 30-minute candle, but I was waiting for the best entry. I wanted the best entry, and in terms of how do you find the best entry? You find the best entry by looking at the 30-minute pattern, and then by looking at the 1-minute chart and breaking it down. So I looked at the 30-minute pattern. The 30-minute pattern said it's going to have a small spike if history repeats itself above this 30-minute candle, then it's going to sell off. Now, unfortunately, it did have a small spike, but it wasn't above the 30-minute candle. I nickel and dimed it. So what I ended up doing was, and I was in puts before this, and I already got stopped out. I already screwed up, but it was a small loss in that sense. But what I ended up doing was, I broke it down by the 1-minute chart, and I said, okay, well, where's the exact top going to be? I want the best entry. I looked at the 1-minute chart, and I said, this is where the top's going to be. It's going to be towards this support. It's going to be towards this support right here that has not been tested. Right around this consolidation, which was at $429.90 to $430. That's where I wanted puts. I nickeled and dimed, such an amazing move, which I should not have done. And me nickel and diming that led to my downfall on the day. I already went into this trade. This was my third trade on the day. I already went into it that I have the perfect game plan to go from red to green on the day. I was down like 4,500 on the day. And I told my team, I have the perfect plan to go from red to green. That's already putting myself in a situation where I'm going to trade emotional and I'm not going to be trading at my best, and I'm focusing on the wrong thing. I shouldn't be focusing on trying to go from red to green in that sense. I should just be focusing on trying to have a nice trade in that sense, maybe ending the day on a smaller red day or just going break even or small green, right? So I took big risk, but the big mistake I made was this. On the 30-minute chart, instead of doing those puts, and I didn't do the puts because it didn't hit my level, I wanted 428.90 and I wanted 430. That's where I wanted to do puts. It topped out at 428.70. So this is what I did. I knew that it was going to try to close bearish in 30 minutes, but I believed that history was going to repeat itself to an exact T. And that's what you need to understand. History does not repeat itself to an exact T. It repeats itself in similar cycles. It's like I told you. It was supposed to spike a little bit higher, which it really didn't. It just kind of crashed right away, and I wasn't able to get in the best entry for puts. So I missed out on the move. As I was missing out on the move, I thought back to how I wanted to go, how I had the perfect plan to go from red to green on the day. So what I did was I added to that plan. I said, fuck, I just missed out on puts, but it's probably going to spike back if history repeats itself. That's where I went wrong, because even if history repeated itself and it spiked back, the overall direction is bearish and red. I shouldn't be trying to find a dip buying opportunity on calls, and this was where the downfall happened. What I did was I told myself this, man, I just missed out on the trade. I'm trying to go from, red to green on the day. So I started looking at previous resistance levels. I said, okay, right here, there's previous resistance on the SPY. There's previous resistance on the SPY. You can see right here, previous resistance. It had a breakout, turned into support. That's bullish. So I said, there's previous resistance on the SPY right around here. When it drops back down, maybe it's going to try to react to support, and then it's going to spike back to my level. I buy the calls on the dip, sell the rip, and then I switch to puts. That's where I fucked up, man. And all of this previous resistance levels already played out. It already had a breakout, dropped back down, reacted as support. So I misread the 1 minute chart in a sense. However, this level right here at 428, this was not retested. So another theory was like, if it hits 428, it's going to try to turn this previous resistance into support, bounce back, go to my key level for puts, and then boom, I sell there, sell my calls there, and then I hit the puts. But basically the mistakes that I made was I misread the 1 minute chart. And that caused me to enter calls where I shouldn't have entered because they already played out. You need to understand, if the levels already played out, you need to avoid them. We trade them the first time, the first initial reaction, when they are not tested, when they are least expected, right? That's when we play them. You have to know when the level is going to work before it works. You have to see that. You have to plan for that. That's what I do in these trading plans. I give you levels. That's the key to what it is that I do. If it already had a breakout and then retest previous resistance, reacts to support, then it already played out. It already worked. And I was buying calls at levels that already worked, hoping that it was going to spike back so then I could sell for a profit and then switch to puts. So basically what I did was, trying to go from red to green on the day, I put myself in an incompetent situation. I made a very quick plan to try to make more money, which is not what I should have done. And I entered levels that already played out. In terms of levels that didn't play out, it was at 428. I was buying calls in the 429s, literally at my levels for puts. And before that, I tried puts before the pattern and I got stopped out, which really pissed me off. So it was just leading up to the perfect storm to go red, right? But the biggest mistake was entering calls at levels that already played out. So SPY breaks above resistance and then it drops back down and that previous resistance bounces, reacts to support. That means it already played out. You have to enter the first time when it drops back down to the previous resistance, reacts to support. That's where you enter, right? So entering calls at levels that already played out. But this was another massive mistake. Just going against the overall move, man. If you're going to trade the 30-minute chart, I wouldn't encourage you to find ways to bet against it. If you're going to do it, you have to do it on levels that have not been tested. It would have worked nicely for me at 428, which was the level that has not been tested. But if the 30-minute chart is telling me that this is going to go super bearish, instead of just nickeling and diming it, I could have taken a starter position on calls and done extremely well. Instead of just trying to chase calls, add calls, hoping that's going to spike back so I can sell for a smaller profit and then trade the overall trend. So that FOMO really screwed me up. Misreading the 1 minute chart really screwed me up. Trying to go from red to green on the day instead of actually trading, right? Because what the fuck does that have to do with trading in terms of going red to green? The only thing in terms of going red to green on the day with trading is risk management. It has nothing to do with the chart. It has nothing to do with the price action. That's all in risk fucking management, right? But just going against the overall 30-minute chart. If you're super bearish for the next 30 minutes, you shouldn't be looking for levels to buy calls. If you missed out, you missed out. That's what it is, man. So it is what it is. Those are the mistakes that I ended up making, and I take full accountability for that, and I've learned from it. And there will be rare situations where if I think the 30-minute chart is going to go bearish, I might do calls, but it needs to be at an oversold, unreal level like 428. It could not bend towards my levels at 429. That's where I screwed up, man. For the most part, with the 30-minute chart, you need to have an understanding of where that 30-minute pattern is heading. Once you identify a pattern, you trade what you see, and then you need to align yourself with trades that are aligned with the 30-minute chart, not against it. Because if you go against the overall 30 minutes, you're going to need a perfect entry with a scalp, and you're going to need to sell super fast. And you're at risk in getting caught up in that big 30-minute move where it just gives back all your profits. You go red, you get emotional. It does not work out too great. Once in a while I do it, but it's got to be at key levels that have never, that's a whole advanced strategy that is not really meant in a sense to be taught in this lesson. That's a lot more strategic trading strategy. In terms of beginner focus, it's really just aligning yourself with the 30 minutes. So if you're bearish for 30 minutes, you look for spikes towards key levels, you start scaling in, you start taking starter position. You're not going to be able to get an exact top. Look at this, man. It's a perfect pattern. If it's going to go 30 minutes and just drop super bearish, why would I nickel and dime it hoping it's going to spike 20, 30 more cents? Just take a starter. If it spikes, add more. Like, that's all I had to do instead of complicating things, missing out, buying calls, going against the 30-minute, hoping that it's going to spike back, trying to sell for profit, then doing the put options. It was such a poor, weak mindset. And that is something you have to kill within yourself in terms of your trading career. You have to let go of all that shit and do what's best for you. So I'm going to leave it off at that. Those are the mistakes that I ended up making, and I will try my best to not make it again. And if I do, then I truly deserve it, and it is what it is, man. That's how you learn from the market. You gotta roll with it, man. So I'm gonna leave it off at that. And tomorrow, I'm telling you, we will absolutely crush it. We're gonna finish this week extremely strong. I'm looking forward to it. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. It is a one-time fee. It is a lifetime access for limited time only. It's the best deal you're ever going to see the program at. It's going to be, that deal is going to be ending soon. If not, then we're just going to raise the price on it for the time being. But as time goes on, it's likely going to switch to a recurring program, and the price will likely go up as well. But I'm telling you, if you're looking for the best deal possible and you want to surround yourself with the right network, the right trading strategies, the right price action, this is going to be the group for you. All we do is trade SPY. We day trade SPY, we scalp SPY, we day trade SPX, we day trade SPX. We don't really scalp SPX, but that's what we do, and we mastered it. And we have the people in here. This is a network that is much greater than me. I'm a great scalper, but Jim C is an amazing day trader. I've known him since 2015. G-Roar is the best day trader I've ever seen. I've known him since 2017, and we have a lot more mods than that, but those are the two that you really need to be focusing on. But I'm going to leave it off at that, man. If you want to surround yourself with the best, it's going to be the first link down below in the description, and you can get instant lifetime access and trade with us starting tomorrow morning in the first link down below. I will see you till then.